All right. So hello, everyone. I hope that you all had a wonderful Thanksgiving and happy holidays to you all as the holiday season is pretty much here. For those who don't know who I am, my name is Davon Reeves. I am the CEO and founder of Vester, which is a crowdfunding platform. And then I have Ramel Lee, who is the managing partner of RDL Hotel Fund One, and he's going to talk to us about his hotel investment opportunity. Before we get started on that, I am going to share my screen and I'll walk you through Vester for those who don't know what Vester is. Okay. Um, okay. Y'all can see my screen. Can y'all see it? Y'all can see the screen? Great. Awesome. Okay. So Vester, for those who don't know what it is a crowdfunding platform. So before I even get into Vester, really what is crowdfunding? So crowdfunding is pretty much the use of small amounts of capital from a large number of individuals to finance a new business venture. And so in this case, we're going to be talking about real estate. Okay. Uh-oh. Let me bring you back. There we go. All right. So crowdfunding. So why Vester? So we are a crowdfunding platform and we're designed to connect deal funders and investors. Okay. And so pretty much what's a funder? A funder is a term. Wait, Ramel's your face showing in the screen? It was showing. Hold on.
So I see my face and
That's okay. We'll make it work. Okay. There we go. All right. We back on track. All right. So funder. So what's a funder? So you may hear me say that term a lot. So a funder is a vestor term and is what we use to identify an issuer or a sponsor who's proposing a deal on our vestor crowdfunding platform. So tonight you will hear from our funder, who is Ramel Lee. Okay. And so, what's an investor? An investor, that's our vestor term, is pretty much someone who invests on the Vestor crowdfunding platform, who sees a deal and they want to invest in it. All right. So, what's Vestor? As I mentioned before, Vestor is a crowdfunding platform where Regulation CF. We are designed specifically for commercial real estate projects. So, we only do commercial real estate. We don't do residential or anything or startups. We only do commercial real estate. Think of it as an alternative way to invest in commercial real estate or raise capital. And what sets us apart from other crowdfunding portals or platforms, we accept both accredited and non-accredited investors. So accredited investor, if you don't know what it is someone who has a net worth of $1 million or more, excluding their primary residence, or they have an income level of 200,000 or more. And so a funder can raise up to $5 million per deal. And we are a member of the Financial Industry Regulatory Authority. And you're probably like, whoa, I thought you were just a website. We are not just a website. We have to go through a lot of compliance. So Ramel knows it was a lot of compliance. He's invested as well to even get his deal on this site. So it's a lot of compliance that we both have to do as a crowdfunding platform or portal and as a funder to ensure that you all as an investor are protected. All right. And so, of course, you want to do your own due diligence, but we do what we can to help with the due diligence as well from a compliance standpoint. So how can you invest on the site through investors? So investors can invest directly through the through the Vestor website. You can go to vestor.com. There are ways to invest. You use your self-directed IRA, savings, mutual funds, stocks, or cash. Those are the different ways that you can invest. I am not a financial advisor. I'm not a legal. So as a disclaimer, make sure that contact your financial advisor or legal representation or CPA before you make an investment. So our investing process, you definitely want to view the pitch deck information, which will be on the site. Conduct your due diligence. It's absolutely free to invest on Vestor. Someone say, hey, I'm gonna charge you to invest on Vestor. No, we do not charge to invest on Vestor, okay? Whatsoever. So it's free to create an account. You can definitely complete the investor questionnaire, which includes in creating an account to invest. How to invest, you can do ACH, wire transfer, use your credit or debit card up to $5,000. As I mentioned before, there's no fee to invest on the Vesta website. How Vesta makes money or generates revenue, the funder pays up to 5% of the total raise. And so this is the team, myself, 15 years of hotel ownership experience. My story, for those who don't know my story, I started off as a front desk agent, and I co-owned 3 hotels across 2 different states. And we launched Vesta in 2022 on July 11th. And then we have Anand Patel. He helped develop the technology. Some successful raises, as not mentioned his PowerPoint slide, which I need to update. We had our first successful raise earlier this year in March. We successfully raised $1 million for a hotel in Lake Charles, Louisiana. I was actually just there, so pictures will be coming up soon. Was this there? They had their investor retreat, and I was fortunate enough to be there and meet some of the folks who invested through Vesta, which was an amazing experience. So they bought a Wyndham hotel and converted it. Excuse me, they bought a Holiday Inn hotel and converted it into a Wyndham hotel. And then our most recent successful raise was a car wash in Rhode Island. Yes, and so we just closed that round out. And now we have Ramel's deal that is on, which is a hotel fund. We have Lion Capital Fund, which is a hotel and multifamily fund. And we have some other deals coming on the platform as well. So make sure that you stay tuned, check your emails, and get on our mailing list if you are not already. So before I pass the baton to Ramel, do you have any questions? I have our information, so that way you can contact us. We are on LinkedIn at Vesta. We're on Facebook, Vesta. You can definitely send us an email at invest@vesta.com, or just go to vesta.com directly to get on our mailing list. So like I mentioned before I move on to Ramel, are there any questions? No questions. All right. Okay. Well, I'm gonna pass the baton over to Ramel since there's not any questions for me. I'm just gonna go ahead and put myself on mute. So Ramel, feel free if you have a presentation, if you want to talk more about yourself in the RDL fund, that will be amazing.
So good evening, everyone. Thanks for joining us here to hear about the RDL Hotel Fund 1. My name is Ramel Lee, and I'm managing partner of RD Lee Capital Partners, and we are managing the RDL Hotel Fund 1. So I'm going to begin sharing my screen here. I just gotta on here. All right. Do you guys see the screen? Am I sharing it?
I don't see it.
Let me see.
And then there's a question while Ramel is pulling up his screen. Can we have the recording? Yes, everyone will receive a recording of today's presentation.
Is the presentation up now? Okay, there it goes.
Yes, it's up.
All right, good evening. All right, good evening, everyone. Before I get started, I just want to give this disclaimer, as previously stated. I'm also not a financial advisor, so before making any investment decision, consult your personal financial advisor. This offering is being conducted under Regulation CF, which was previously explained, and is open to U.S. residents. This presentation is for informational purposes only. It does not constitute an offer to sell or the solicitation of an offer to buy securities. Investment in these securities is speculative and involves a high degree of risk. Now, before I get into the particulars of the fund, as it was explained before, it's a Regulation CF on the crowdfunding platform Vestor. The reason why I chose the route of using the Regulation CF exemption is because I'm recently retired from civil service. I did 22 years working for the great state of New York. And while I was working, I became a serial entrepreneur, building a security firm, logistics company, short-term rental business, and decided to get into commercial real estate. And that's when I came across Davon's material, and she became my mentor and taught me about hotel investing and introduced me to my first two deals, which were two hotels in Indiana, which are doing quite well. And hopefully we're exiting from those soon to cash out. But what really made me do the Regulation CF was before I was an accredited investor, I had limited opportunities to invest in alternative investments such as commercial real estate. So it is a burden, I will not lie, on my end with the compliance and the limited amount of capital that I could raise per deal, only $5 million. However, I wanted to provide the opportunity to people who don't normally have the access or the opportunity to invest in the hotel space. So the benefits of the RDL Hotel Fund 1, part of it is we aim to provide investors with a diversified portfolio of real estate assets. If you're already into investing in real estate and you're not investing in hotels, this is a great opportunity to do so. If you always thought about owning a hotel, this gives you access to the hotel industry without really being a hotel expert. Myself and my team, we handle the day-to-day operation of the hotels, and we manage all the issues with the hotel, and you get to invest and be part of ownership without having to be an expert in it. If you seek to make an investment that also provides positive cash flow, that's one of the great things about the hotel business. I will still, something that one of the people on my team that I'm going to be working with, Omari Head, always says, the hotel business is a business operating on real estate in a franchise model. I love that saying because it completely explains the asset class. You're also able to benefit from opportunities that are driven by economic conditions. As you know, the hotel rates, they can change at any time. Yeah, you can change your hotel rate several times during the day based upon demand. And it's because of that, it's a great hedge against inflation. As things cost more, that includes hotel stays that also cost more. So you don't have to take the loss of rising cost of prices. It does get passed on to the guest, and that's typical in the hotel business. And also the benefit of investing in the hotel asset is the hotels, especially economy and extended stay hotels, have proven to be resilient during economic downturns. So the opportunity that's available, the projected market size for the hotel business this year is approximately 236 billion. One of the segments that we're looking at, the economy segment, is 37% of the total market. And another segment that we're looking at in the hotel asset class are extended stay business, which is hotels that specialize in people staying at the hotel for 5 days or more. Think of Staybridge Suites as an extended stay property. There's $7 billion worth of demand that wasn't fulfilled by extended stay. So what that means basically is if they built extended stay hotels to meet the demand, it would take them approximately 10 to 12 years to meet that demand. The growth trends in the opportunity, uh, like during the pandemic, it, everything took a hit, but the recovery of the hotels that we're targeting recovered rather quickly, and we're back to pre-COVID numbers already. As I stated before, these hotels have proven to be resilient through economic cycles, and growth can be driven by budget conscious travelers. So even when people are short on money and they're looking to travel, we do have the product that they will look to seek. So our investment strategy, what we're looking to do is acquire properties and manage the operating costs, right? So there's two ways to make money: uh, raising your price to increase your revenue and lowering your costs. We're looking for properties that we can add value to by managing the operating costs using professional management companies. And also, we're looking to grow the property by values at least 1.5 times over the investment period. Also, what we're looking for when we're acquiring a hotel asset is we're looking for the demand generators. For those who don't know, a demand generator is something in the area that attracts people to the area that will require them to stay at a hotel. So think a hospital, a university, uh, a tourist attraction, theme park, those type of things that draw people to the area. That's what we're looking for. We're looking for hotels that are surrounded by a few demand generators. That way, if one fails, we still have another to hedge our success. And we're going to look to optimize operational efficiencies, leveraging technology, uh, a lot of customer facing technology we want to utilize with these assets. Nowadays, you can rent a room, book a hotel stay on your phone, check in on your phone, and use your phone as a key, making it extremely convenient for people to stay. And that's the type of things people are looking for. And that's the type of value we're looking to add to the hotels that we acquire. So part of screening, we have to do due diligence when we're looking at the deals that come before us. We get a lot of deal flow. We're looking, most of the deal flow that I've seen has been coming from the Midwest and the Southeast that meets our criteria. So we do the initial screening to make sure that the things that I just spoke about our ability to add value, the multiple demand generators, those exist. Then we get into the financials. Is the hotel already profitable? If we operate the way we want to operate, what will be our net operating income? That will judge our returns. Then we look at the operational assessment. What aren't they doing that we can improve on to drive growth? Because when we look to exit on the multiple of our revenue. So we want to drive up our revenue, our bottom line, and we do that through operational improvements. Also, the market. We want to see the total market and the local market. We want to do analysis on that to make sure that we're buying in the right place at the right time. And risk assessment. We want to analyze everything that could possibly go wrong and have a mitigation for it. So this is the team that I'll be working with. You have my experience, 18 years in operations and investments. You have Tom Baer, he asset management. He has over 25 years of experience and overseeing over 1 billion in assets. You have Kishane Patel, over 15 years of experience in commercial real estate law. He specializes in hotel negotiations and franchise agreements. And you have Omari Head, 10 years of experience as a real estate broker, does acquisitions and has done over $1 billion in transactions. You're looking at a combined experience of almost 60 years here and over $2 billion in assets under management and transactions. So we have a strong team working together to execute our operational plan. and this is the operating plan. So as I stated before, key for us is working with professional management company. The asset we require, we're going to make sure that the property management company is familiar with the asset that we purchase and the location that we purchase. Very important. It's not a cookie cutter operation or one size fit all. As I described before, the technology, make sure that we double down on the customer facing technology, making it very convenient to stay at the hotels that we acquire. The pricing and occupancy management, as when I spoke about the ability to change the rates even several times a day, staying on top of that is how we can maximize our revenue. And quality assurance is very important. The worst thing that could happen is someone stays at our one of the hotels we acquire and it's dirty or the equipment isn't functioning. So quality assurance will be top of mind for us for each asset that we acquire to ensure that everyone that stays with us has a comfortable stay, a clean stay, and wants to give us a rave review, driving our occupancy rate up. So this is just we conducted a sensitivity test on revenues based upon where we're looking at deal flow from. So the assumptions on this chart is that when we acquire the asset, that there's just a daily ADR, which is average daily rate, right? That's what you pay for the room of $65 and an occupancy rate of 58%. That means 58% of the rooms are booked. And per every 100 rooms, that's what the revenue looks like just from our sensitivity testing. And the numbers that I show are on the low scale of the sensitivity test. We want to try to be as conservative as possible with our projections and our assumptions. So as you can see, just slight increases of a 1.5% annually in our occupancy and just 2% in our average daily rate. You see the difference in how it impacts the revenue. Now, as I stated before, when we spoke about growth and being able to adjust the rates based upon the economy and economic conditions, inflation alone is 2.5% a year. So that's why I say we use extremely conservative estimates for our projections and our assumptions. And just, full disclosure, these are forward-looking estimates and should not be construed as guarantees of performance. Okay? Have to make sure I give you the disclaimers so we're all on the same page here. So in a fund with those previous assumptions, based on 100K investment, we're looking at cash flows of and this is just a case study. So, this is, like I said, forward looking. Based on the low end of the sensitivity test, we're talking about a little more than 22,000 a year in cash over the course of the whole for the fund based on 100K investment. The exit, this is where I talked about the growth and adding revenue because you sell at a multiple, right? So if you have revenues of $1 million and you pay $3 million for the hotel, just by raising your revenue 10%, you now exit at the same 3x multiple. And if you exit just at the same multiple that you purchased this at 3x, you're now exiting at 3.3 million, effectively making $300,000 by just over the time you held the hotel, just raising the revenues only 10%. So once the exit event happens, there's a split of the profits, and based on 100K investment, that split would be approximately $243,000, making a total return of a little more than $265,000. And like I said, being very conservative with our numbers, this is only taking into calculation of a 2.66x multiple exit. And typically hotels we're looking at, they exit on a 3 to 4x multiple. And that would give us a target annual IRR of approximately 20%. So, like I said, these are hypothetical. This is a case study, and it's based on the assumptions that I gave prior. There's risk factors involved. Like I said, investing in a hotel is a speculative investment, and you should definitely view the Form C and all the offering documents and consult with your personal financial advisor before making any decisions. So, like I said, the exit is a big part of it. Gives basically a rocket boost to our targeted potential returns. So there are two ways that we're looking to exit: is either through a sale, selling it once we reach the life end of the fund to another hotel investor, and that's where we get the returns on the multiple. If the climate at the time we're looking to exit does not suit or the sale isn't the best way to go, we can always refinance like another like you do like a house. We can refinance the property and uh, get more attractive debt terms and get back the equity that we've been paying into the hotel through the life of the fund. So all of these exit strategies, both these exit strategies are based on market conditions. But you should know there's 60,000 hotels, approximately 60,000 hotels in the United States, and at any given time, at least 1/3 of them are on the market, meaning that there's constant activity transaction with hotels. So these are the investment terms of the fund. We gave a case study based on $100,000, but the minimum investment is only $10,000. The estimated holding period is 5 years, as I stated, based on market conditions. If we increase the value within 2-3 years and we get attractive offers, it may be the right time to sell and we get out early. As far as the returns, investors get a targeted preferred return of 8% annually. That basically means the investors get 8% of the cash flow, the money that we make, get a return of 8% off the cash flow, the money that we make, before the general partners, myself, my team, gets anything. So the investors get paid first, and then we get a catch up afterwards. Then the profit split is 80-20, 80% to the investors, 20% to the sponsor, that's myself. So, like I said, I'm invested in the property as well. I'm investing a significant portion of my net worth into the fund. So I'm not trying to lose my money. I'm definitely not going to lose your money. And you get paid first in this deal. So, as I've given multiple disclaimers, here are some of the key risk factors. This is a new fund, so there's a limited operating history. The hospitality industry risk in general. We also saw what happened with COVID. Hopefully that's the only time it's going to happen in our lifetime, but those are real risks. The investment is illiquid, so if you do make an investment, the estimated holding period is 5 years. So 6 months later, they can't really call me up and say, "Hey, I need my money back. Something happened." That may not be possible because we're investing in the asset, looking to stabilize and get cash flow and things like that. It's very dependent on there being the management performing, as we said, getting the customer facing technology going, the quality assurance going, making sure we optimizing pricing, just your general real estate investment risk. So those are the key risk factors involved with this fund. Now, those risks you'll see if you review the Form C. I have about 130 pages of risk, but and while that may seem scary, it also made me and my team have to figure out 130 answers to these risks that may appear. So this is our mitigation strategy. As I said, we're seeing most of our deal flow in the Midwest and Southeast, buying multiple properties. We don't want to have them in the same area in case there's a regional issue. We want to make sure that if there's a regional issue, it only affects one hotel. So if we do have something in the Southeast and it's a bad hurricane season, that shouldn't affect our properties in the Midwest. Using dynamic pricing models, that's a risk mitigation against the industry in general, the economy in general, as prices, we are able to adjust prices based on demand and the overall economic picture. Maintaining a contingency of reserves. It is real estate still, and we have HVAC, we have things that we have to make sure that we're taking care of. So when something does go wrong, we're going to have a reserve of funds to address that issue. That way we're not sacrificing our revenue and putting our operation in danger to address those type of issues. And we want to make sure that we're participating in sustainability initiatives, making sure that we're as green as possible. That's a definitely a climate thing and also an economic thing. Let's see here. My thing seems to be frozen here. Okay, let's see. Make sure I got you guys on the right page. All right, here we go. All right, so why invest in RDL Hotel Fund 1? Strong demand. The economy and extended stay sectors have shown resilience through the economic cycles. And as I stated, extended stay hotels, they are $7 billion short in supply. There's been stability in volatile times with this asset class. You get your up to 8% before we even think about getting any money, even though I'm heavily invested myself in it. Still make sure that you get your money first. The equity multiple, as I showed on one of the charts before, that exit is really how we supercharge our returns. My team, we have over 50 years of combined experience in hotel investment and operations, and over $2 billion in real estate management and transactions. As I went through the risk before, we analyzed the risk and have come up with mitigation strategies for all the risks that we may encounter. So it's a great opportunity to get invested in the asset class. So you were shown how to use Vestor. You've been brought up to speed on the way we're going to make RDL Hotel Fund 1 a success, and go ahead and make your move today. So I want to thank everyone coming in on this evening. Again, I'm Ramel Lee, partner of RD Lee Capital Partners. This video will be on Vestor and it will be sent out, and you can review this pitch deck again. And also there's going to be the Form C with all the risks that you can review, and statement as well. And as previously, any decision, consult with your personal financial advisor. So I see there's some stuff in the chat. I guess we will move to questions. Okay, I see Diane, yes, if you can unmute yourself. Or can I unmute you? Let me see.
Yes. Thank you so much, Ramoli, for giving the speech. My first question, I would like to know, um, do you have a deadline for the investor to put the money for this project?
Yes, we're close. So we have a targeted raise of 500,000. That's when we can start making moves to acquire assets. Although we can raise up to $5 million with this fund, but as of April 25th, we will stop the raise and deploying whatever capital that we haven't deployed yet at that time. So April 25th will be when we stop raising capital for the fund.
What happens if by that time, April 25th, you do not have enough up to the amount you want? So is the deal canceled or how it
Yeah,
works?
if we don't for what some strange reason we don't raise the amount by April 25th, we would have to return the money to the people that invested.
Oh, I see. If we return the
That's why we started with a low target of 500,000, because at that point we can begin acquiring assets, and I don't foresee us having any issue at all raising the 500,000.
Oh, I understand. Let me see. Yeah. And then for the return of investment, we have to wait by the end of 5th year. We have it all each
No,
year.
so what will happen is once we acquire the asset and stabilize the property where it's cash flowing,
Yeah.
there will be quarterly distributions of the
Oh,
profit. That's where the 8% annual return comes from the cash flow of the quarterly distributions.
thank you. Yeah.
I see another hand up, Daniel Ragland. Let's see if you got.
Yes, thank you, Amel. Do you currently, looking at some hotels to acquire now, or are you going to wait until you raise at least the 500K to start researching and identifying hotel properties to invest?
Yeah, we're looking now. So we have a specific buy box of what we're looking for, and just being completely transparent, it may be one out of every hotel that we look, one out of every 100 hotels that we look at. So we're going through those deals now, underwriting those deals now, and finding things that fit the criteria of what we're looking for. So we're already started. If and like I said, I don't see any way or reason we wouldn't raise at least the 500,000. But even if not, I'm going to take my money and buy a hotel. So we're already looking through deals.
And excuse me, and in regards to reporting and communication to the investors, how does that look like once you acquire a property and get it stabilized? How would investors be communicated on the performance of the asset?
So there'll be communication with the investors monthly. We'll give updates of the property performance.
And how would that be communicated?
Via email. There'll be an investor portal where you'll be able to go in on your own time and look at what's most recent, and we'll also distribute information electronically and quarterly. Either right before, right after we do the distribution, we'll also host a live Zoom meeting with all the investors that want to participate, and we'll go over all the asset performance and answer any questions any of the investors have.
So is that going to be outside of the investor crowdfunding platform, or is it going to be a separate investor platform portal for investors?
It will be a separate portal.
Separate portal. Okay. All right. Thank you. Oh, and one more question.
Sure.
what is your anticipated time frame once you acquire a property, a hotel property for stabilization? What time frame are you looking at?
I'm looking to stabilize it. So there's a lot of different variables.
Right.
There may be an opportunity to reposition the hotel. For those who don't know what that is let's say we acquire a Red Roof Inn, but Hilton Spark is looking for a presence in that space. We may work out a financial deal with Hilton to convert it. So that will take a little longer to stabilize because we'll have to do the renovations. But if it's something that we're not looking to reposition, we're looking to acquire assets that are already cash flowing in the buy box that we're looking for. So stabilization, I wouldn't say be longer than a quarter for if we're just going in and just taking over and keeping the same flag. But there are a lot of different variables, changing management teams and maybe some staff. So, but we'll definitely keep all the investors fully abreast of any type of glitches or delays or anything in stabilization. Are there any other questions? I can't see all the hands. Let me see. I'll try to stop sharing and then I'll have a better view. Yes, Diana, see you have another question. See if I can unmute you.
Yes, I would like to know how long we allow for the due diligence for the hotel for this one. How long we can have it?
How long can you have? I'm sorry. How long
The
can you
due diligence.
have the? I'm sorry. I'm having issues with my audio. Can you repeat that just one more time?
Sure, sure. I mean, for the due diligence, how long we
The
have
due
it?
diligence.
Yes.
Oh, so the due diligence, we're that is a process that we're doing before we even acquire the hotel. That's prior to acquiring the hotel. So that's stuff that we're working on right now as we're going through deals. Where if we see something that fits our buy box, then we make sure we do all the due diligence to make sure that the numbers are what the sellers say they are, the operations what the seller says it is, the market is what we're looking at. So before we acquire the hotel, that's when we do the due diligence.
Oh, you will do it only after you have owned the money you need, right?
No. That's happening. That's happening right now.
Oh, that's happening right now. Oh,
Yeah, that's happening right now. We're looking at deals right now.
In your past, do you have any similar to this one in the past, your past experience?
So I'll kind of sum up my experience with this. So yes, I'm invested in 2 hotels in Indiana right now. And in addition to that, as I quoted my friend Omari, it's a business operating in real estate in a franchise model. I've operated a number of businesses. I've been investing in real estate for a long time now, including short-term rentals. And one of my businesses did operate my logistics business did operate in a franchise model. So I do have the experience of the general principles of running the hotel, but also my team, as I stated, we have 50 years of experience in this industry, and and I can always call Dave on.
Yeah. And then for the financial updates, as you mentioned, every quarterly, we will receive an email update from you, right? How about, can we able to have a platform we can access directly by our own?
Yes. That was part of what I said as well. There will be an investor portal where you can go in on your time and review the most recent up-to-date numbers of what's going on with each asset.
Thank you. That answered my question. Thank you.
No problem. I think I have Ebony Jones has a hand up.
Yes, thank you. Couple of questions. One, I'm not sure if you mentioned any brand preferences. Well, do you have any, or is that just not stated in the terms?
Not necessarily a brand preference, but we will go with a brand. We're not going to go independent. We are going to take advantage of being part of the franchise. We're looking at economy and extended stay. Now, all of the brands are playing in those spaces. Just in the last, I'll say 60 days, I've been with the people at the Hilton C-Suite, Choice Hotel C-Suite, Red Roof Inn C-Suite. So we're gonna go with who gives us the best deal.
Okay.
Yeah, because there's franchise fees and royalties and all of those things. So we're gonna make sure we're gonna position ourselves with the brand that gives us the best deal.
Okay. And then will any of the funds be used for due diligence?
Well, due diligence is really, how can I put it? It's more just legwork from me. It's me actually reviewing everything that's turned over to me from the potential seller. So it's me and also my asset manager, the Tom Bayer will be looking, and Omari actually, he's helping with the acquisition. We'll be looking through all the deals. And so, like I said, part of the due diligence is seeing what the demand generators are in the area. That costs me nothing. Reviewing their numbers, just going through their spreadsheets, their star reports, things. And for those who don't know, a star report is basically a ranking of your hotel's performance against their competitors. So that doesn't reviewing those doesn't cost anything. So the due diligence, it's just really us being on our computers and working, grinding it out. Did I answer your question? Did I lose you? If you're talking, you're on mute now. Do we have any other questions? Daniel Ragland, I see.
Yes, so I think the question that Ebony was asking was, is any of the funds raised by the investors are going to be used as part of Sorry. So yeah, I just unmuted myself. Is any of the funds raised by the investors, are those funds going to be solely used to acquire the asset, or there's going to be, or is those funds going to be used for any due diligence or anything that needs to be done prior to acquisition?
You're muted.
Muted now.
Now I'm muted. Okay. The due diligence stuff is more clerical administrative work that we're doing during the deal flow process. So that in itself doesn't cost anything in particular. There will be funds that are held for capital expenditures. As I stated before, we want to have a capital reserve for if anything goes wrong with the hotel. We don't want to have to generate revenue to fix something, right? So there'll be funds set aside to that. And there's the fund, the raise the percentage that we have to pay to Vesta for the raise to be on the crowdfunding platform, and those will be the funds. Those will be the major expenses from the fund, from the capital that's raised.
I'll clarify also. So more specifically, in terms of prior to the acquisition, the funds for the deposit, attorney fees, franchise application fees, lender fees, are the funds from the CF being used for those costs?
Yes, the expenses of acquiring the hotel will come out of the capital that's raised. I've already started. Obviously, I had to do a lot of legal work to get the regulation CF exemption and this Form C drafted by the attorney and things like that. That money that I've, like I said, I've invested a large portion of my personal net worth. So I've already started spending money to get this up and running and going. I believe on the Form C, we have a breakdown of what the funds that are raised will be used for. But similar to as buying a home, there are fees, broker fees, closing costs, things of that nature. It's not just going towards the acquisition price of the properties.
Okay, and I have one last question, unless someone else had one.
Sure.
How will you structure your capital stack? $5 million isn't that much, and if you're looking to acquire multiple, are you bringing in additional equity investors, and how much debt?
So we're looking in. So with the $5 million, we are going to take on we're going to use leverage. So we're looking to have a loan to value ratio of 70-30. So with the $5 million raise, we are expecting to be able to purchase anywhere from 12 to $13 million worth of assets.
Okay, thank you.
Any other questions? You're not bothering me with questions. Keep them coming. I want to give you all as much information as possible.
When can we receive your document to review what we talked today?
It's currently on Vesta right now. So if you go to Vesta right now and you go to RDL Hotel Fund 1, you could review the pitch deck that we just went through.
Oh, thank you.
Also have access to the offering documents.
Thank you.
I saw another hand up.
She answered my question. I wanted to know how much starting.
Oh.
I'm assuming that's on the website.
I'm sorry, can you repeat that question?
I stated that she answered my question, Diane.
Okay.
But my question was going to be, what's the starting amount? But I'm assuming that that's on the website.
When you say starting amount, what are you referring to?
What's the minimum you can invest?
Oh, the minimum investment is $10,000.
Okay. And
I put the link in the chat. I put the link in the chat for those who want to learn more about the deal.
Hey, Devani, tell your son Yvonne said what's up. One last question. So if you invest more, are there any incentives or what?
So right now it would have to be, so there's certain incentives that are outside of the Form C that really compliance wise, I can't get into right now, but for the top investors, there will be some perks that they'll be allowed to have. I just don't know who the top investors are going to be to have that discussion yet.
Understand.
And also, Raman, each offering you have will be different name, right? Or your company cover own different offering.
So this is the only offering that's going to be on the platform as of right now, which is RDL Hotel Fund 1.
Yes.
So that's the current offering that we're presenting on the Vesta platform.
But later on, if you have another offering, is it will be under your company name as well, or you are going to do the different LLC?
If there's a different offering, yeah, it would be a different LLC.
Thank you.
Will there be catch-up payments made to investors from the time that the capital is deployed once you do acquire and it gets stabilized?
So there's the target of the 8%. So until I meet at least that, there's no payment to us. And then after that, then there's the split. If there's not enough revenue to get to the 8%, because depending on the close and the stabilization, then that for that year, unfortunately we would have missed our target.
So another one, you will not use out of fund until you have enough money on April 25th. Am I correct?
Once we hit the $500,000 mark, if we have a deal that we can strike on, we'll strike on it before April 25th. But we'll continue to raise until April 25th.
Oh. But my question is, are you going to use our fund, investor fund, before you get the deal, or only after you get the deal?
Only on a deal. Yeah. Only on a deal. It would do no capital raise will be used unless we're making a deal.
Okay, thank you.
Any other questions? These were some really great questions. This was good. Anyone else? All right. If there are no further questions, I want to thank you all once again for logging on, spending your Monday evening with us. And I will turn it back over to Davon to close.
Thank you. Thank you.
Oh, well, thank you all. Oh, there we go. Thank you all so much for joining in. Thank you all so much for your questions. Like we mentioned before, this will be on the Vesta website for you all to watch the replay, as well as the pitch deck for you to review, as well as the other documents, including the Form C that Ramel was talking about before. So should be on the website within 24 hours. Thank you all so much for tuning in. If you are not on the email list, make sure you sign up. The link is in the chat for you to visit and learn more We'll put it in the site for you just in case, in the chat box for you. So thank you all so much. Until then, we will see you next time. Make sure you follow Vester for more information and updates. Have a good night. Thank you all.
Thank you. Thank you.
Thank you.
Thank you.
Thank you.